Every time I'm doing something that is not essential, I'm giving up on something that is essential. Greg McKeown. Folks, what we try to focus on here every day is what is essential. And what is essential is recognizing price movement. In particular, when we have jumping in points, and those are weekly vertical crossovers. And as some of the discussion was online yesterday about volatility and about the price percent oscillator, folks, we don't teach using the price percent oscillator as the sole mechanism for getting out of a trade. It is our mechanism for getting into a trade. And in fact, we talk rarely about the price percent oscillator being your mechanism for getting out of a trade. Yes, you might when there's a 2-day crossover in the opposite direction going, well, a down if you're in an up move on the weekly, or up if you're in a down move on the weekly. But my friends, again, we talk about experimentation, about working, about learning each individual stock and ETF that you wish to track, and what is your best method for pulling your trade, volatility or not. Is it based on violations of trend lines? Maybe the 4-hour, then the 2-day. Is it 4-hour crossover, 2-day trend line, whatever it might be? That is where the real rubber hits the road. Jumping in is very easy with a weekly vertical crossover. Again, if the 2-day recrosses work, then yes, the 2-day recrosses. Getting out is where the mastery is really involved. We don't have any kind of magical jumping out point. That is where you've got to experiment, you have to work, you have to spend your 10 to 15 minutes a day following the charts that you are interested in, filling out your trade worksheet, your daily market worksheet, your weekly market worksheet, creating your own stock trader's almanac so that you know how your stocks and ETFs, how they work, what season, what time of year is it, how have they been doing lately, what have you learned from past movements, from past quarters. Again, all of that is so critically important. So again, pay attention to what we say here at the channel. Follow us on a daily basis so you don't get half-truths and spin off not understanding what we are talking about. The price percent oscillator is a lagging indicator, as we say over and over in our book. The derivative oscillator is a leading indicator. And for those of you who followed us, read the book, and understand, you know how we use those, along with trend lines, Bollinger Bands, Heikin-Ashi candlesticks, all the stuff we use. So please pay attention, listen to what we have to say. Don't misquote what we talk about. Study to show yourself approved. Let's jump into the charts. S&P 500 down 0.18% for the day. What do we see going on as this week develops? Well, in the S&P 500, we see ourselves reaching a higher high, a big candle, well, a decent-sized candle, moving up. Candle bodies higher, as is the wick on top, no wick on the bottom, above the weekly trend line. Price percent oscillator moving up. Derivative oscillator gaining momentum. 2-day. Remember, we had that 2-day recross. How well's it done for you? Quite well, despite any volatility. Despite what the price percent oscillator may or may not have been doing, what have we seen with price movement? Looking quite nice. Price percent oscillator gone flat at the end of the week ending the 11th of August. And then this week it's moving away slowly, moving up and away from the red signal line with the derivative oscillator. So again, jumping in point somewhere around the 326.50 mark or so to a high of 338.28. That is beautiful. Just going into the 4th week of that. We look at the half-day chart. We do see a slowing over the last day and a half. Popped up and then slowing down. Again, crossing over at the end of the day on that 4-hour chart. Pay close attention. We're going to redraw our trend line if we can draw one. That's probably about the best we're going to get right there, and we can see where that 4-hour trend line has been. It's right there on it, and we see price is above the 2-day, well above the weekly. So again, pay attention. You can take your profits at any time. How well have you done? Outstandingly well, based upon that 2-day recross. So again, pay attention, follow, learn, practice. That's what it's all about. Keep your notes. Understand what these things mean. Now, let's look at the Qs, the Nasdaq 100. Its high for the week is 274.83. The prior 274.98. So we're very close, but not higher than the prior week. Smaller candle. Price is above the weekly trend line. Price percent oscillator's lost a little energy. Derivative oscillator has 2. Look at the half-day chart. Just won't recross, will it? Up for the day, 0.23%, but just doesn't have the energy to recross. Look at the half-day chart. We had a day and a half of up movement, and then, of course, we saw in the afternoon a slowing down of the up movement and not enough energy for the price percent oscillator to cross over. Derivative oscillator still negative. So there's still some downward pressure as we get further down the charts. But again, the weekly is okay right now, but would love to see a higher high. And that 2-day, still weak. So we're not in it because the 2-day would definitely have pulled us out of it if we had not gotten out before. And we're waiting to see if there's going to be a 2-day recross. We're going to leave stocks, go to bonds. Bonds down for the day 1.07%. And of course, we had that really sort of bounce off of the red signal line that started this week. Not enough energy to cross over last week, thinking that might happen, but it didn't. Look how we see price volatility narrowing as the Bollinger Bands, these dashed blue lines, get closer. And we see, again, the weekly derivative oscillator still positive, losing momentum. Price percent oscillator is negative and headed down. Look at the 2-day. We had that 2-day recross, didn't we? At the close of the market on Tuesday, we asked how many of you saw that. We talked about where things were. Did you jump in and find that? Again, jumping in point somewhere around the 168 something 50 mark maybe. Again, I'm using the Heiken Ashi numbers, so I know that's not all that accurate. Gets me somewhere in the ballpark. What's the low? 163.17. That's pretty decent, isn't it? Just over Wednesday and Thursday. I would say going from the mark of the crossover there at the 168.50 mark or so, or just call it 168, down to a low of 163.17. Not bad. Not bad in 2 days. With a 2-day recross, derivative oscillator heating up, price percent oscillator slamming down. What do we see on the 4-hour, it's not even 4-hour, 195-minute, half day, down in the morning, further accelerating down in the afternoon. See if we can redraw a better trend line. Remember, we always want to try to connect 3 candles. That's okay right there. So again, we see bonds hammering down, and that's fine. We just want to follow the movement. Lastly, we go to gold. What's up with gold? Gold is up 2.36% for the day. Now, we have a weak week. We see a wick on top, a wick on the bottom. The wick on the bottom is about the size of the candlestick. The wick on top is maybe 1.5 to 2 times the size of the red open box. Means a slowdown in the up movement. Look at that price percent oscillator, how it's gone flat, maybe headed down. And the derivative oscillator has also gone down from where it peaked the prior week. So we do see some blowing off of steam. But again, up for the day, 2.36%. What's happened with that 2-day? Well, it's not crossed over going down yet, but because of the prior down movement, even with the up day, we do have a red down candle, and we talked about how it's pushed through. Now, again, remember, we talked about how the prior 2-day candle representing Monday the 10th and Tuesday the 11th pushed through our 2-day trend line. It wasn't a price percent oscillator crossover yet, but we saw that occur. That is a warning sign. It plumbed the weekly trend line, which is a potential issue and problem. And of course, this latest one has gone below it. Price percent oscillator rocketing down, derivative oscillator looks like it's gone negative. So again, a lot of weakening there. What does the half-day chart show us? Well, it shows us where we plumb the bottom on the afternoon of Wednesday, and then things tried to turn around, still didn't close above the weekly trend line. Price percent oscillator still negative, lost some of that downward momentum, as has the derivative oscillator, but still negative. So pay close attention to that 2-day. Those of you who want to ride gold a little longer, now you've done well. What was your jumping in point? Who can complain? You jumped in around the 166 mark up to a potential high of 194. And where did it close the day? At 183. So let's see, 166 to 183, still pretty good. And those of you who are hanging in there, I'm not telling you to do that, I'm telling you to do what you've learned. And if you've not practiced, traded, and learned, then read the book and follow the directions and learn how each chart works. And again, I emphasize over and over and over how important the daily market worksheets are, the trade worksheets are. That's where you learn the nuts and bolts of how each individual stock, and they're like people, they react different ways to different things. So again, please take my advice. Go out there, practice trade, fractional trade as you get better. Don't risk any real money. We're not a stock calling service. We're an education firm, and you got to practice, friends. You know, how do you get to Carnegie Hall? Practice. How do you get good at this without losing your shirt? Practice. Please do that. Please just listen. I don't come here every day and encourage you with a bunch of fables. I want you to practice. And of course, look how over and over 13 weekly vertical crossovers. Of them, every single one has worked except one. That is a 90+% track record for crossovers. It's beautiful. I can't even tell you, I haven't kept up with the 2-day recrosses, how they've done. Maybe some of you have, and you can provide me with that. I'd only have so much time in a day, but that's important. Lastly, thanks so much for being with us. If you hadn't purchased our book, please do so. If you care about what we do and want us to continue to present this on a daily basis for free, then of course being a Patreon supporter would be most appreciated. You know, again, reciprocity is a universal type law, and we would sure appreciate your help and support. What's up with Bitcoin? Nothing for the day. Nothing happened with Bitcoin, at least on the index that I am following. Zero up, zero down, nothing. I don't know what that's about. Maybe they didn't get anything. I don't know. But it's just saying nothing happened with Bitcoin. So we'll leave Bitcoin where Bitcoin is. What's up with real estate? Down 1.23% for the day. We look at the weekly chart on real estate again, you know, reaching a higher high than it has lately. Still hasn't popped up to how high it got back on the week ending the 12th of June. But that price and the price percent oscillators lost a little bit of energy. Derivative oscillators about flat, maybe a little bit. We look at the 2-day chart. We can tell it's a little less than flat on the price percent oscillator. We got a red doji, lots of indecision tending down. Derivative oscillator, also losing momentum. So we'll see how that continues to pan out. That is showing some real weakening. We look at the half-day chart. What do we see? Again, we had that half-day crossover going down back on the afternoon of Tuesday the 11th, tracking sideways and then down on Thursday. So again, showing some weakening. If you are in that trade in real estate, then of course are you holding up any trend lines at all now? Particularly on that 2-day, looks like that's been violated. I hope that if you are practice trading real estate, you are drawing the trend lines, you're doing what we teach you to do on our 4 big charts. Lastly, we go to oil. Oil down for the day, 0.52%. Again, green up box for oil so far in the Heikin Ashi candlesticks. Price percent oscillator, a little more than flat. Derivative oscillator gaining upward momentum. Again, still haven't reached the high for the 2-day back on the 5th of August. And then we look at the half day. We had that crossover back on Wednesday, up a little more Wednesday afternoon, and then sideways and down on Thursday. And oh yeah, I'd be remiss if I didn't tell you, look at silver up 8.67%, big green up candle, moving up. Price percent oscillators lost a little bit of energy. Derivative oscillator heading up. 2-day chart. We look at that, we can see where silver peaked back on Friday the 7th. Red doji, red open box doji Monday, Tuesday, Wednesday, Thursday. Solid red, not a doji, solid red spinning top and a red open box top. Price percent oscillator, which have been heading down, sort of flattened. Derivative oscillator still negative. We go to that half day, we can see where things bottomed, actually bottomed, hit the bottom on Tuesday the 11th in the afternoon, and then settled on down toward it, and then started moving up on Thursday. Price percent oscillator's flat. Maybe it'll cross over, but again, silver up 8.67%. We want to talk about some volatility that'll scare the crap out of you. Of course, the beautiful thing, though, is if you were tracking using our charts and you're jumping in point somewhere around the 8th of July or the 10th of July, and again, you saw it sort of cross over and then cross back. Even if you waited until the 14th when things are really moving away on that 2-day recross at about $18, boom. I mean, even now at 25.45 from 18, just back on, your latest point at 714 to now, beautiful. Anyway, my friends, use these charts, practice these charts, fractionally trade, practice trade, do whatever you need to do to learn. Learn, practice, show yourself approved. God bless, my friends. All the best from the whole team at Charting Wealth World headquarters.